Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the midweek natural gas report, natural gas prices are currently down to 337.20, down 5.5 cents or 1.6%. This following a very strong bullish reversal pattern yesterday. As you can see on the daily chart, we've got what they call a tweezer bottom. These are the previous 2 days, which have a low near the same level. And then we're looking for a confirmation today, which would be a positive settlement, but right now we're not getting it. So here, looking at the daily chart, it looks like we're going to just meander between these Bollinger Bands down here at 306.60 on the support side and all the way up at 381.30 on the upside, with our daily pivot right now at 343.90, which is currently where we're just trading below. So let's take a look at the hourly chart. As you can see here, whoops, it's the daily. Let's go to the hourly. We are looking for a pivot support here at 332.90, so we're right there. And we're looking at upside resistance at 355.10. The RSI is pointing lower, so we're looking for test of support today. Our second support level will be at 320.5, 3205. Let's take a look at those front to back spreads. The front to back spreads are up today. That's because the front is down and the back is up. So we are currently looking at the Jan versus June spread here, and that is up 7.3 cents or 4.55% at 161. So again, our break even here is at the $1.60 level, and we're well above our first two support levels here, well below the market here in around the 130s. But right now we're choppy, choppy, and choppy. So let's take a look at the Jan versus October spread. Same thing. We're positive today. We're up 2.7 cents or at 110.70, up 2.5%. Again, the same thing. We're just chopping around our previous resistance levels at 109.80. And of course, we're well above our break even at $1. The MACD, the moving average convergence divergence, shows that we really don't have a solid direction or support at this level. So expect that we'll be bouncing here between $1 and our recent highs here just set 2 days ago at around $1.1630. And let's take a look at WTI. WTI today is, well, just slightly positive today, up 7 ticks to 62.307 or 0.13%. We're looking at some positive news here for WTI, but again, we have to get above this resistance level here. We're talking about this 63.40 range to about 65.27. If we don't get really a strong push out of here, expect that prices will continue to fall lower. So what's causing the upside last night? Here it is. Per CNN, new intelligence suggests that Israel was preparing for a possible strike on Iranian nuclear facilities. Is this Netanyahu's way of just getting a seat at the table for recent US-Iran peace talks? Or is Iran pushing quickly for a nuclear weapon and Israel is really starting to get anxious about that fact? We won't know, but just remember last year in April, Iran and Israel traded missile attacks on each country. Looking at the weather for natural gas here in the United States, we're looking at below normal temperatures here in the southeast, which is probably why we're waning on the upside again today. For, as you can see, the above normal temperatures are out in the west, where we do continue to have a drought. And let's look at the tropics, because in about a week, we begin the Atlantic hurricane season, which is supposed to be an above normal active hurricane season. But as you can see, we do have some storms out here in the mid-Atlantic, but nothing in those three basins we start to look at, which is in the Gulf of Mexico / America, around Belize and around Panama. It's fairly quiet. Let's take a look at ERCOT. ERCOT, demand here is about 75,000 megawatts for the next 4 days, and then it tails off with some cooler weather. Well, as you can see here, the battery storage resources really didn't discharge too much into the market this morning for the breakfast hour, and are waiting for the evening hour when things start to get pinched. As you can see here for the current day, it's around 8 to 9 o'clock at night when wind dies off and solar dies off, and we get that big spike in natural gas demand. And as you can see here, they're expecting prices to average around $100 per megawatt. And that's where those battery guys are looking to capture most of that. So they're avoiding the discharge here in the morning, looking to charge again throughout the day as wind continues to pick up, and then discharge into that evening pinch. Let's take a look at our stocks that we have on our list. This is the oil and gas E&P sector. This is market cap between $2 and $10 billion and a short float over 10%. It's continuing to be the same six companies. Again, Apache was added last week. And let's take a look at how they're doing. This is for the 1 week performance. And unfortunately, with crude oil and natural gas prices off this week, everything is down. Northern Oil and Gas is the worst, down 7.38%. So let's take a look again. For recapping here for the June natural gas contract, we're currently down 6 cents, trading 337.70, down 5 cents now, or 1.46%. Please let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.